metrics. And when I look at companies, and I think if you ask my colleagues as well in the venture part of Vex Funding, the most important part is the team that we're looking for. Who are the founders that we invest into? And what I really, when founders get me really excited is, somebody who is very ambitious, who has shown like good execution skills, stuff like that. And also a very important skill, in my opinion, is are you able to build and collect a great team around you with very smart people that can help you on the journey. So I think that's one very, very and the most important ingredient.
Mathias, it's great to meet you. Thank you so much for spending time with us today. To start, please tell us who you are and what you do.
So my name is Mathias, and I work for the Danish growth fund called Vex Funding, which is the sovereign fund of Denmark. We have one LP, which is the Danish state. I work in the venture capital department of Vex Funding, and specifically in the early stage investment department, where we do investments ranging from pre-seed to seed stage. Yeah, so that's basically what I'm doing.
Okay, so now you've introduced a number of terms that I would like to get into more detail as we go through the conversation. But just for those out there that don't really understand anything about venture capital, yes, can you explain to us what venture capital is and how it works?
I think that depending on who you ask, right, I don't think there's like a real solid definition of what venture capital is. So I think it's about who you ask. And from my perspective, I think that if you could look at it in this way, that if you have read the book Lean Startup, for instance, with Eric Rice, I think he defines entrepreneurs as people who work on building solutions and products in circumstances of like extreme uncertainties. And I think if you translate that into what we do as venture capitalists, we are investors that try to help these entrepreneurs reach the long-term growth potential through access to capital, network, knowledge, and so forth. So I think that's basically what we do, and we do that through an equity investment, basically.
Okay, so then, based on what you're saying, venture capital is just one of the ways in which startups can get access to capital.
Yes, it's venture capital is equity investment into early stage companies, I would say, like pretty very basically.
And what other ways are there for startups to actually fund their activities?
I think, these days there's a lot of different financial instruments popping up and opportunities, right? So we're seeing like an increase of different financial instruments coming from business angels, individuals that is putting money into investing into companies. There's more and more equity crowdfunding platforms, like you probably know Funderbeam, for instance, popping up. Micro VC funds, like groups of small private people going together and maybe in a more professional setup putting money into it. And then you have venture capital companies. And I think you will also probably see a lot of new initiatives like revenue-based finance solutions, maybe even like peer-to-business lending opportunities, stuff like that. So I think you can look at it from like this, a group of equity parts that is more active, and then you have like debt facilities that is more of a passive form of capital to startups. Yeah.
All right, that's really interesting. So can you tell me why a founder might choose venture capital over one of the other different types of access to credit?
I think it's funding. Yeah, I think it's how you could look at it is, from a founder perspective, is that what kind of company you're trying to build and what kind of journey are you going on and what do you need to succeed on that. And I think that's how you should choose between debt and equity probably, and what kind of stage your company is in. So what you get from an equity investment, in my opinion, is that you get capital, of course, but you also get like network, and you get mentorship probably, and all the things that come with active ownership. But the trade-off is that you have to sell some part of your company, right? Sell some of the upside. So that's how you should balance it. And if you look on the debt side, you don't dilute yourself, you don't sell anything in a company, you get all the rights to future profits and so forth. But the trade-off is that you don't get all the same network, active ownership, mentorship, and so forth. And I think every company has probably used both tools down the journey, but depending on where you actually use it in the life cycle that you're in. Yeah.
Right. Okay. So let's talk a little bit about that life cycle, because you introduced some terms. You talk about early stage and pre-seed. Please break that down for us. What are the different stages of investment in a company from the moment they start?
I'm a part of an incubation program out here in Copenhagen, Finland, and I get that question often. So can you really break that down? And in my opinion, personal opinion, it's more VC lingo thing. It's not. If I was a founder, I wouldn't focus that much on that. But if you look at all this terminology of pre-seed and seed and so forth, it's basically a way of defining what part of the life cycle of your company. I mean, how mature are you as a company in terms of product development, commercial traction, and so forth. So if you're a pre-seed company, you're very early stage. Mm-hmm. If you're like Series C, then you're probably a scale-up. And then it's also a thing that you use to kind of define what size of the round that we are talking about when you're raising capital. So, of course, if you're a pre-seed round, then you're raising a less amount of money than you are if you're doing like a Series A. So that's basically trying to define stage of the development of the company and also the amount of money that you're trying to raise.
Okay, tell us now a little bit more about Vaekstfonden. What's the purpose of the organization? What do you do? What distinguishes you in the market?
Yeah, so Vaekstfonden is a quite unique organization here in Denmark. So again, we are the sovereign fund. We invest on behalf of the Danish state. Our purpose is to support the ecosystem of SMEs, and we try to pick and develop the companies that Denmark cannot afford to miss out on, basically. Mm. And we have a broad range of different financial instruments to support that. We can do everything from debt to subordinated loans, guarantee, stuff like that, into venture capital, business angel matching loans. We do funds of funds investments into other VC funds and buyout funds. So we have like all different kinds of instruments. And then what makes us kind of unique, of course, is that we are a sovereign fund, but also that we are built and born as a truly patient and long-term investor, which means that we don't have any like end date on when we have to get in and out. We're patient. We try to push to let the company grow in the way that they think is right pace and stuff like that. And yeah, so that's what I think makes us unique. Then of course, when you have all these different kinds of instruments, it makes it possible for us to sort of customize different financial solutions on your journey, meaning that back to the life cycle, right? If you are an early stage company, you have probably one sort of capital need, and then if you're a more mature company, you probably have another one, and we have different financial instruments. And then final, very important part of our business is that we always do that in partnership and syndication with the private market, so to say. Mm-hmm. So we always go in together and try to find the best solutions there.
Right, okay. Now, we've seen an increase in investment in various industries over the past 5-10 years in the Nordics.
Yes.
Have you noticed any changes in the flow of capital or any trends in how the capital is flowing to these organizations?
I'm primarily focused on the Danish market, so that's where my point of view is. But I think, yes, there's been some changes. You will probably see when I talk to some analysts in our company, you will see like an inflow of a lot of foreign investors, which means last year, for instance, there was a large pickup in like U.S. investors into like the Danish market, for instance. That means that the rounds is becoming larger. There's more competition around getting into like good deals, stuff like that, which is very good. Which means that the venture capital market is maturing, in my opinion. Mm-hmm. And then again, back to the different kinds of financial instruments that is also becoming available for startups and scale-ups, means that there's all different kinds of opportunities now than there wasn't there for like 10 years ago, for instance. So I think you're going to see changes in the inflows of capital, definitely. And it's more available, basically, for the company. So that's good, very good.
Okay, but we've talked about the alternatives or the options that founders have in order to gain capital. What about if I'm an investor? Or let's say I'm an angel investor. I have a little bit of money that I want to put to good use. What are my options? What could I do in collaboration with an organization like Vex Funding?
in Vex Funding, we have actually a program where we sort of vet some of these business angels and make them into a program where they can, do an investment, and then they can take a loan from Vex Funding and put directly into the company. So that's one solution that we work closely together in a more formalized way. But again, in the team that I'm in the early stage company, when you can invest alone, we tend to also see if we can attract private investors. And in the very early stages, it's actually often business angels that we do this together with, and it creates a lot of value because we in the VC world, most of us like generalists, and it creates a lot of value from my point of view to attract industry experts from business angels into the company that could be more hands-on, maybe have more deep industry knowledge into the specific case here. So we think there's a lot of value in working together. And I think what we're seeing there is that there's coming more business angels, and that's actually coming a sort of a wave of former founders that's popping back into the community or to the ecosystem, investing into new startups, which is creating a lot of value, in my opinion. So that's definitely something I'm seeing, and it's very interesting.
Right. We've also spotted a trend in which there's companies popping up that are using technology to democratize things like investment, wealth management, venture capital.
Yeah.
How is that impacting the venture capital market?
It's a tough question. I think that it's sort of, I think in the future, you have to be really careful about predicting the future, but I think it would create some opportunities of democratizing the asset class of alternatives, probably, that you can invest into sort of the private equity market now. And there's different ways of doing that, not only into startups, but there's also a range of platforms giving access to real estate investments and so forth. So I think that's definitely something that is coming, and how it's affected us, meaning that, like I said before, I think it's this good synergies between venture capital firms as generous, most of them, and having industry experts and giving that in, that brings a lot of value to the company. So I think that's the best way to actually look at it. That's what I'm experiencing.
Right. So just the question that I have now is, so private equity through a democratized process, is that in competition with venture capital of the sort that Vex Funding will provide, or is that something that you leverage for synergies? How does that combine?
Actually, I don't see it as competition. I think it's good for the ecosystem. It's good for maturing the market and the access to capital for founders, which is basically the most important, right? And I think that's good. And then all these parts can basically work together, and maybe we can go in at different stages of the company and help how we can. So I don't see it as competition, but of course, different tools means that you have different availabilities for the founders, and they will have to pick. But that's how it's supposed to be, in my opinion.
Right.
So I think there's good synergies in it.
Okay, and earlier in the conversation you mentioned that your purpose is to make sure that you invest in the companies that Denmark cannot afford to miss on.
Yeah.
So the question I have now is, what do you look for to know that this is a company that you cannot miss to invest on?
Again, very, very good question, and I think that even within our organization, that kind of depends on who you're asking. But we are a financially driven organization, but we have a heavy focus on innovation, on responsibility, and environmental return. But we also look at classic financial metrics. And when I look at companies, and I think if you ask my colleagues as well in the venture part of Vaekstfonden, the most important part is the team that we're looking for. Who are the founders that we invest into? And what I really, when founders get me really excited is, somebody who is very ambitious, who has shown good execution skills, stuff like that. And also a very important skill, in my opinion, is are you able to build and collect a great team around you with very smart people that can help you on the journey. So I think that's one very and the most important ingredients. And then of course we look into what kind of problem are you solving? How big is this problem? How does that translate into like the market opportunity, which is very important for us. We look at the solution that or the product that you're building. You know, how unique is that compared to like the state of art in the market that you're in, and also, you know, how transformative it is, how it's going to transform the industry that you're in now. And then of course we look for the commercial track, meaning, and that actually varies on what you look at in terms of what stage the company is in. But in the early stages, you know, all customer feedback. Do your customers love your product? How is it to get customers in, and so forth? And can you capitalize on and monetize on an attractive business model? And then again, back to the important part of our business also, you know, how is the company acting in terms of like ESG and stuff like that? That is very important for us, that you are a responsible company in all means. So we also spend quite some time looking at that.
Okay, and you must look at hundreds of companies that are developing their ideas, looking for funding. Have you spotted any interesting trends that excite you, of things that keep popping up more and more often in the minds of founders?
I think you should be really careful about predicting the future, right? Because I mean, the last couple of years have really shown how it can change fast. But what gets me really excited, and a couple of things that I'm seeing in a more broader sense, and I'm focusing primarily on software, right? But of course, sustainability, huge thing. I think, and there's a lot of things within that: alternative meats, electric vehicles, sustainable fashion, stuff like that. And that's one thing that I think is very interesting, and a lot of things happening there. And I think, you know, if you look to like the B2B SME market, you will probably see, you know, a range of different software tools that can help these companies automize and, you know, increase efficiencies. It could be automated bookkeeping, low-code, no-code tools, and so forth. I think you can't really say anything now without saying Web3, right? There's a lot of things going on with blockchain, crypto assets, and so forth. And there's a lot of different things going on there, which is exciting to actually follow and see how that develops, because I think it's, for most in the mainstream market, it's still kind of new and unknown thing. And even for me, it's tough to really get your head around, but it's exciting to see how that actually evolves. Again, fintech is such a major thing, and I think there's a lot of things going on there, and then a lot of things from Web3 actually, in my opinion, coming out of that world. And then maybe on the consumer side, what really excites me right now is tools that can help you at home, spending more time on what you think it's fun. I think there's a lot of things in the creator economy actually that's a lot of fun to watch and see what's happening, and that has some overlap with the fintech world as well, but also like software solutions for home services that can help you whatever you want. I think that's very exciting. So that's some like general topics that excites me personally.
Right, and have you seen anything specific on fintech trends that are coming up for investment that you could pinpoint?
I think if you go back, and even in my short career, if you go back, there's been great innovation within like consumer-facing fintech, which is really, really cool. And I think that, you know, again, all blockchain crypto thing that's definitely going to happen. A lot of innovation that is really exciting in sort of all layers in that. And I think you're going to see, I mean, what I'm seeing right now, at least, is that we're seeing like different sorts of new companies popping into every layer of like using blockchain. I think we're going to see probably the next couple companies on the application level using that sort of technology, which is probably going to be exciting. And then I believe that we're going to see there's actually a great opportunity within like B2B fintech, especially around, you know, we see like changing environment of regulation, right? We have seen like the conversation has been a lot about fintech and the legacy banks and stuff like that. And I think there's a great opportunity in where in the intersection between the two of them, if you can, we've seen solutions that is helping the larger financial institution being more digitalized, being maybe a little bit more consumer friendly, and maybe adapt technology like we have in all different kinds of areas like you and I are used to. And I think if you can work with the large financial institutions, there's great market opportunity there. And I see some of the companies coming through that is focusing on that. So I think that's some of the trends that I'm seeing, at least in the companies that I'm looking at.
Okay, and you also mentioned that for Vaekstfonden, the founding team is very important.
Yes.
Are there any skills in terms of background that you see that you say, well, these skills need to be present within the founding team? It could be like engineering or computing science or any other scientific field. Anything that stands out from that balance of skills and capabilities?
I think a diversified team in all means. It's important for me at least, and I think that's what we look at. So having a diversified team in terms of gender, background, age, and so forth is really good, and it's a very important ingredient in actually building a strong founder group, in my opinion. And I think that we really look at complementary skill sets. So both commercial skill sets with technical skill sets, marketing, go-to-market, and I think again back to the other point that I made was that I really like when you see like very ambitious entrepreneurs that has a vision for the future, but is capable of putting it in a way that you and I believe, well, this is really going to happen, and also seeing people that is really, really good with people skills, building teams, attracting really good talent to the group in all layers of the organization. I think that's probably the most important skills that you can have, is to really be good at attracting talent. Yeah, so that's what really excites me.
We talk to founders all the time, and one of the things that we consistently hear from them is that when they face the prospect of investment, especially with in private equity, that they find it really hard to get investment if they have not failed in the past. Is that something that you've seen as well, or that you would relate to?
To be honest, not really. I think what probably comes out of that is that, of course, if you coming back to like the industry knowledge, if you have been in a startup, if you've been on the journey before, then it creates kind of trust with the investors that you've tried this before. Maybe you have succeeded, but I don't know about the failure part. I have invested in like first-time founders as well, so I don't really focus that much on that part. But I think it's a great skill set to have an experience, to have tried the journey before, being in a startup, scaling it up and so forth, and see what works and what doesn't, and what to avoid and so forth. So that's definitely a thing that we like to see.
Okay, and then just the last question. So let's say that someone listening to this interview might have a great idea, but might not have the necessary experience or the confidence to say, well, I should actually go and pursue it. What sort of things would you recommend a potential founder to focus on in order to be able to build their skills, their confidence, and their capabilities to eventually be able to attract capital and launch their idea?
Well, first of all, if you haven't done it before, don't be afraid of doing it. So I mean, there's a lot of successful people that wasn't necessarily an entrepreneur before, but jumped out and did it, and very successfully. So don't be afraid of that. And I think that being open and also being open about your idea, telling people about it, asking for input, and just reach out to other people that's tried it before, for instance. I think that's very good. I have never heard of anybody that has been reached out to an entrepreneur and having a no of not spending like 10 or 15 minutes of getting the input. So reach out to people in the community, also investors. From my perspective, I think every investor is kind of open to listen to new ideas and open to meet new founders. And then I would say if you come to a stage where you maybe have a little founder group there, and you're ready to look for investors, then my suggestion would be prepare. Make sure you're prepared when you start, and talking with investors, everything from budgets to business plan to how you think the company is going to evolve over time and so forth. So I think prepare. So that's some of the things that I would do if I was a first-time founder. And that said, I've never been in the founder's side of it, but from my side, that's what I would do.
Yeah. All right, Mathias, well, thank you so much for spending time with us and for opening our eyes to this fascinating world of venture capital.
Thank you for having me.